This is a really difficult one for regulators. It's a huge problem. We were just talking about it with Steve Weiss. I don't know if you caught part of that. How should we expect them, if at all, to move forward on this?
It's a good question. And if you really step back for a second, what we're really seeing is that ESG is the tip of the spear, sort of rebooting capitalism, right? You have the Business Roundtable talking about the purpose of a corporation. You have institutional assets moving to this class. So how do you establish a regulatory framework, a common taxonomy, metrics and data that standardize some of these capital allocations? It's difficult.
So let me ask you this. I mean, is it possible, in your view, to establish standards that could be applied when, for example, a fund describes itself as an environmentally responsible fund? Could there be standards that the SEC or the Investment Company Institute sets up that says to describe yourself and market yourself this way, you must meet these certain criteria? Or if you're going to be a socially responsible fund, that you have to have this kind of, and you have to be willing to disclose this kind of information. Is it possible to do those kinds of things?
That is the best question you could ask. And I believe that is what this whole segment you guys ran just now, you heard very smart people, different, very large institutions that manage money, essentially tell you different definitions, different things about what ESG means. And that is the difficult part about this. But the way I think about it, and I think many CEOs, investors, society at large are thinking about it, is the fact that we're even talking about the board composition, or if a company is polluting, or fair wages and living wages for their employees. And what you're seeing, I think now, there's been a lot of converging, very massive secular trends, right? You have investor preferences, you have policy changes, you have sustainability concerns for the world, no economy, no nothing. And you're dealing with this sort of in real time. One last thing is some of the people in the ESG industry, let's call it, think about intentionality data. Others think about outcomes. Now, you can think about a company that maybe doesn't pay their companies a fair wage, but is solely powered by solar. Well, is that an ESG friendly company? Maybe. So you have a lot of things being discussed now, which is the fact that we're even discussing it, I think is accretive to the system we govern ourselves under.
Shepard Smith here. Thanks for watching CNBC on YouTube.